Good morning. My name is Brent Williams-Ruth. I am a Washington State licensed attorney, and I am a member of the Real Property Probate and Trust Executive Committee of the State Bar. What does that mean? It means I know what I'm talking about. I'm not going to do this as a TikTok influencer and try to explain everything in 1 minute or try to use flashy language to get people to make this go viral. This video is a estate tax 101 discussion for Washington State estate tax. I'm going to break this down into 5 specific parts. Number 1, what is the Washington estate tax? Number 2, who pays the estate tax? Number 3, we're going to have a discussion about the exemption for when the estate tax kicks in. Then we're going to talk about number 4, why did the adjustment for inflation freeze in 2018? And number 5, what is wrong? Let me back up. What is the present bill going through the Washington State Legislature that is known as ESB 6347? All right. Number 1, what is the Washington estate tax? In Washington State, when you pass away, we do not have an inheritance tax. We have what is called an estate tax. That is when an estate of a deceased, called the decedent, is above a certain amount. Any amount above that amount, called the exemption amount, or if you want to call it the exclusion amount, is taxed by the Washington State Department of Revenue. The tax itself, which is not going to be part of this conversation, is a graduated rate that begins, again, for that first $1 million over the exemption amount, you will pay right now 10%. So I'm going to give a real life example. Today, the exemption amount is $3,076,000. If you have an estate when you pass away that is worth $4,076,000, your beneficiaries will receive that money except for a 10% charge for that $1 million over the exemption amount. So on an estate of $4,076,000, you will pay $100,000 to the Washington State Department of Revenue. That's the way it is. We're not here to debate the merits on whether your estate tax is good, bad, indifferent, whatever. It is what it is, and that is the system. Okay. Who pays the estate tax? The estate tax is paid by the estate of a deceased person. Now, again, I'm going to take a little side note and say there are many ways you can avoid the estate tax. Number 1, if you give your entire estate away to a charity or a qualified charitable organization, there's 0 estate tax. But if you're leaving your estate to a non-qualified beneficiary, such as a charity or a spouse, then any amount over the exemption amount will be taxed. Now, what is the estate tax? I mean, what are the dollars that go into an estate tax? Your gross taxable estate is where the estate tax begins. And what that means is if you are owning a home, if you have a 401k, an IRA, a investment account, a checking or savings or CDs or collection of cars or jewelry or anything that has a market value at your date of death goes into your gross taxable estate. This includes life insurance. And again, you heard me say an IRA or 401k. Please understand the special relationships that retirement plans have does not prevent them from being part of your Washington taxable estate. Same thing with life insurance. If you have a $500,000 life insurance, you have a $500,000 estate. Then if you have $1 million house, guess what? You now have a $1.5 million estate. If you have $400,000 in a 401k, you now have a $1.9 million estate. Let's say you have that collectible Corvette with the split window from 19, whatever it was. That the value of that car, the market value of that car is added to your estate. You've got a $40,000 Rolex that is added to the value of your estate. Anything you own at the time of your death is part of your gross taxable estate. Okay. Who pays this? The estate, not the beneficiaries. When I help an estate administer probate or a trust administration, please know in Washington state, a traditional revocable living trust does not shield you or the estate from the estate tax. Only an irrevocable trust that is appropriately structured and set up, of which there are a multitude, usually for super high net worth individuals, are shielded from the estate tax. So we're not going to go down that rabbit hole. But please know, a traditional revocable living trust does not provide any tax shielding. None. So part of an estate administration is person passes away. The next person in charge, whether it's a trustee or an executor or personal representative or administrator, will create the estate inventory. This is the document that says everything you had of value and beyond the sentimental or nominal items. For example, I've just got this lovely cup that I use for tea because I just think they're pretty. They are not worth anything. Someone might buy it from a garage sale for $10. Okay, fine, $2. This does not get added to my estate. But it just so happens that my grandfather was a connoisseur of art and he bought a Picasso in 1940. Okay, I'm making this up. He really didn't. But let's say he did. And now my dad has passed away and that Picasso came to me. That Picasso is now worth $6 million. That is going to go on the estate inventory as being part of my estate. And I will have to pay a certain amount of money because I owned a house, a car, I had investments, and a Picasso. So that is what goes into the estate. And then the administrator, before my estate is ever distributed and pushed to my ultimate beneficiaries, the estate tax is paid by that person in charge after I die. Okay, what is the exemption amount? The exemption amount is the amount established by the government that says the estate tax is meant to be paid by those who are wealthy. And in 2014, the Washington State Legislature said, we want the estate tax to start for those people who have more than $2 million in the value of their estate. So if you had a house, investments, checking account, CDs, set of golf clubs, whatever, and it was less than $2 million, your estate is non-taxable. You have not exceeded the exemption amount. So there is no reason for you to file an estate tax return. There is very simple, easy breezy, non-taxable estate. All right. In 2014, when they created the exemption amount to the $2 million level, the Washington State Legislature, in their infinite wisdom, included a provision that, we don't want this tax to be regressive and going down to people who aren't considered high net worth. So the law said that every year the exemption would be adjusted based off of the inflation for the Puget Sound region. Now, this part's a little technical, but this is where the sausage is being made right now. the Consumer Price Index report used to be called the Washington Consumer Price Index report for Seattle, Tacoma, Bremerton. Okay, so the Department of Revenue at the end of the year in December, before they're getting ready to go away for Christmas and New Year's, they would pull the CPI report from the national author, the department that creates that report, and it would be for the Seattle, the title was the Seattle, Tacoma, Bremerton Consumer Price Index report. They would see the amount of inflation for the last year, and they would say, okay, next year, starting on January 1, this is the new exemption amount. So in 2014, it was 2 million. Then it went up in 2015, and I'm going to make up a fake number because I don't actually know how much it went up in 2014. But let's say it went up to 2,010,000. So in 2015, you only had a taxable estate if you were above 2,010,000. And it kept going up. And in 2017, the indexed amount for the exemption after adjusting for inflation was $2,193,000. Okay, but what had happened in 2016? When Donald Trump was elected and put into office in January of 2017, his people took over the national agencies. And to show that they were doing something, those individuals decided to rename the report. The data did not change. The data was the same. But instead of being called Seattle, Tacoma, Bremerton, it was changed to being the Seattle, Tacoma, Bellevue report. All right. So why did it freeze? We're going into segment 3 now. It froze because the Washington State Department of Revenue went to pull the report, and according to the statute said the Washington Department of Revenue had to use the Seattle, Tacoma, Bremerton CPI report to get the inflationary number. Well, guess what? That report didn't exist anymore. File not found. Sorry, no report. Instead of just reading the statute to say, okay, well, who cares what it's called? It's all the same area. It's the Puget Sound region. But no, the Washington Department of Revenue took the position that the Seattle, Tacoma, Bremerton report doesn't exist. That means there is no inflation. That means we will not adjust the exemption amount in 2018, in 2019, 2020, 2021, 2022, 2023, 2024, and 2025. Now, all of us who were living in 2020 knows what happened. COVID, massive inflation. Inflation was off the charts. It was crazy how much it went up. A lot. But our exemption amount stayed steady at $2,193,000 because there was no report. Well, in 2025, myself and several other members of the practice area of estate planning and estate administration worked collaboratively with the legislature to get the estate tax exemption adjusted, caught up for inflation, and then also returned the indexing. Yes, the legislature also did something we didn't ask for, which was they changed the tax rate amount. So on July 1, 2025, the exemption amount jumped from $2,193,000 to $3 million. Now, some people say, oh my gosh, that's huge. It's really not, because that was inflation. I mean, the official number for just had been the inflationary numbers would have been like 2,974,000. So they rounded up and basically gave 25,000 extra to Washingtonians to start at a nice smooth number of $3 million. And so what does that mean? That means that 3 million in 2025 was the same buying power as 2 million in 2014. Now, I was not elated that the estate tax went up. Our maximum tax rate at the highest end jumped up 15%. But here's something that no one really talks about. Because of the adjusted for inflation, even with the new tax rates, Washingtonians with $9 million or less actually got a tax break. Yes, your tax rate would have been higher, but the amount of tax that you would have paid for everyone with 9 million or less actually decreased. But unfortunately, this is a nuanced issue that people don't see. They look at the tax rate and they think, I'm getting charged more. And so there was all sorts of fervor. Okay, fine. Fast forward to the legislative season 2026. There is threats by people who are going to move out of Washington because their estate tax is so high. Okay, sure. So there was a bill proposed that said we're going to keep everything the same on the Washington estate tax law, but we're going to go back to the old rates where the maximum rate for the highest amount, because again, as I said, it's graduated, was going to cap out at 20%. Fine. No one was going to argue that we needed to keep those higher levels. I didn't understand it. But here's what happened. On Monday, in the Washington State House of Representatives Finance Committee, a striker amendment was proposed by Representative Street from the 30th Legislative District, which is east of I-5, running basically from Renton to Madison Valley. And not only did they keep the proposed idea of bringing back the tax rates, but he also took the exemption back down to 2.193 million to be effective July 1, 2026. Okay, fine. All of these are policy discussions, and I will gladly have debates with individuals about our budget and our taxes. I have no problem with it. I don't like it. I think it's pushing down the regressive tax system, because 2.193 in 2026 as sure as heck isn't adjusted for inflation from the 2014 2 million. People who were never intended to pay the estate tax, their families are having to pay it because the fact that they simply have enough assets because they bought a home. They worked a good job that had retirement. They made good investments and bought into Amazon and Microsoft and supported the community and our companies. And so they have 2.4 million, which, that sounds like a lot. And for someone who has no money and is homeless, it is a lot. But in the Washington State spectrum, where the average King County house was sold for $960,000, give or take. I haven't looked at the actual numbers lately, but it's over 960,000 was the average real estate transaction price. 2.1 or rounded to 2.2 million is not that much. But again, we're not here to debate the merits of what the exemption amount should be. Where I am hot as fish grease is that the bill also undoes or reverses the change for the exemption amount. They're striking out the language in the bill that says we're never going to play the CPI title name ever again. The CPI number for the report that covers the city of Seattle will be the report we pull to get our indexed inflationary amount. So if the report changed from its present Seattle, Tacoma, Bellevue and became the CPI report for the Great Northwest and said that there's only going to be one report. We're going to save government money. We're going to lay off people on the federal government, and we're only going to write one CPI report for all of Washington, Idaho, Oregon, Montana, Wyoming. That would be the report, and the indexing would still happen because the city of Seattle would be included in that data set. It was a perfect solution to a problem caused by the Trump administration in 2017. And this is where I'm a little angry and frustrated. The bill literally goes back and renames and says the Washington estate tax exemption amount will be indexed for inflation using the Washington or the Seattle, Tacoma, Bremerton report. Do you see the problem? The problem is no such report exists. And this was brought up during the committee meeting on Monday, March 2nd. It was brought up that they're going back to a report that doesn't exist. And they know, they acknowledge, they don't care. That means that the Washington State Legislature is slated to pass a bill that will literally be defective on signing by the governor. They know that the indexing will not happen because there is no such report. Now, why am I angry about this? Because as much as I love a good old-fashioned policy debate, bring back my Republican counterparts where we would butt heads over ideology and who should be taxed and what should be taxed. That's not what's happening. That is not this debate. The Democrats in the state legislature want you to think, oh no, we want it to be indexed for inflation. But they also know it won't be, which means that it's going to just keep clawing in people that were never meant to pay the estate tax from the bottom. The people who just barely had that amount. Well, really, if you were to look back at what the value of their estate would have been if you do a reverse calculation, it's not what it was. So what do I want to have happen? I want the legislature to be honest. If you don't want to index the estate tax amount, then just strike out the entire sentence that says the Washington estate tax exemption will be indexed for inflation every year. Oregon doesn't index for inflation. It doesn't have to be. But instead, they want you to think that it will be indexed for inflation. But they have you might as well name it, we're going to index for inflation using the Walt Disney Company annual report for their theme parks in Washington State. There is no Disney theme park in Washington State. That's truly, this may sound ridiculous, but for the legislature to name a report that doesn't exist is an absolute betrayal of trust, of fidelity, of integrity. And there's no way around it. So that is why I am trying to get as many people to reach out to their state level representatives and senators to vote no on ESB 6347. Because either leave it as it is, which fixed the problem. If you believe in indexing, the law was written in a way that was perfect. Whatever CPI report that is created by the federal government that covers the city of Seattle will be the indexed inflationary calculation for the entire Washington estate tax. Or strike out that entire sentence and make it disappear and say, this is the exemption amount, period, end of story. So again, this is truly meant to be an estate tax 101 for the Washington estate tax. There are so many other nuances. There are other exemptions. I'll tell you one. Number one, a surviving spouse that was married at the time of the death of their spouse will pay zero estate tax, no matter how much. It's a 100% exemption. So if you're a married couple and you have $100 million, you can leave that whole estate to your surviving spouse and they will pay zero estate tax. The estate tax is only added to those who are non-qualified beneficiaries that have surpassed the exemption amount. So I thank you for my friend who reached out to tell me that my prior videos were too quick and didn't give enough context and explanation for non-lawyers, non-elected officials, because this is important. And I want everyone to know where, again, I will debate the issue of fiscal policy, where I will not tolerate either Republican or Democrats is deliberately advancing a law that is known to be defective and not do what it says it's supposed to do. Thank you for watching. Have a great day. Please spread the word.